This is a podcast from the Business Times.
Good evening. It's Monday, June 29th, 2026. Here's your market-focused daily closing bell update by the Business Times. Asian stocks wobbled today after Iran and the United States agreed to halt renewed hostilities that had cast a shadow over an interim peace deal and supported oil prices, while the dollar stood near a one-year high on rate hike bets. A return to diplomacy in the Middle East would follow several days of tit-for-tat strikes since an Iranian projectile hit a cargo vessel in the Strait of Hormuz last week, with both sides accusing each other of breaking an interim ceasefire. Asian markets were under pressure, with South Korea's Kospi down nearly 2% and Japan's Nikkei slipping 1%, leaving MSCI's broadest index of Asia-Pacific shares down 0.3%. Worries over the future of the peace deal lifted oil prices, which have given up almost all of their war-driven gains as markets quickly reprice the prospect of easing supply. Brent crude futures paired early gains today to trade 0.5% higher at just over $72 a barrel, while U.S. West Texas Intermediate crude rose 1% to just under $70 a barrel. Easing oil prices may help reduce some inflation pressure, but elevated prices are likely to keep the U.S. Federal Reserve under pressure to raise rates. Investors are pricing in at least one hike this year, a sharp reversal from expectations of 2 rate cuts before the conflict began. Investors have also been battling concerns that valuations for AI-related firms have become stretched following years of gains, with Micron's strong earnings forecast and Apple's price hikes last week underscoring the contrasting challenges. Markets are undergoing a tactical rotation away from mega-cap AI into smaller, more cyclical segments, marking early signs of broadening after extreme concentration. Rising odds of a rate hike have lifted the dollar. The dollar index, which measures the U.S. currency against 6 other units, was at just over 101, below the one-year high it touched last week. The Japanese yen was languishing at just under 162 per U.S. dollar, as fears of another bout of intervention from Tokyo kept the fragile currency from breaking through its lowest in 40 years. The rising dollar has weighed on gold, which was down 0.87% at just over $4,000 per ounce. The yellow metal is set for a 13% decline in the second quarter, its biggest quarterly drop since 2013. That's it for today. For more business news and market updates, visit bt.sg. And Lens on Daily for the latest tomorrow at 10 a.m.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.